All right, profit makers, get ready to flip the script on your financial future because today's guest is all about building your wealth your way. Adam Bergman, a former tax and ERISA attorney turned retirement rebel and founder of IRA Financial, one of the top self-directed retirement companies in the game with over 25,000 clients and 4 billions. Yes, that's a B in assets invested. He's a nine-time author, Forbes contributor, who's made it his mission to help everyday people take control of their retirement like a boss they are. From real estate to crypto to private business investing, Adam is here to show you how to make your IRA work harder for you so you don't have to. Buckle up because this episode is where smart meets sassy and meets serious wealth building.
Welcome to Power Your Profits podcast, your friendly guide in bringing your business revenue to the next level. Listen as host Dr. Susie Carder hears inspiring stories of success from her fellow entrepreneurs and transformational leaders. Prepare to make significant change to your strategies as they unravel the secrets of building multi-million-dollar businesses and the most effective tips on finance, marketing, and sales accountability. If you want to take your first steps towards explosive business growth, this podcast is for you. Without further ado, here is your host, Dr. Susie.
So, Adam, thank you. Welcome. I am so excited for us to talk about this conversation. One, because you're a straight shooter. Two, your voice is easy to listen to. And I love that you break it down so simple. So, when most people think of IRA, they think boring retirement account. Can you break down what makes the self-directed IRA so powerful and honestly kind of badass for wealth building?
Sure. So let me just double click and give your listeners a quick, I promise, history lesson of the IRA, because I do think it's the most powerful wealth building tool out there for all of us. So IRAs were created in 1974 by ERISA. It's around 65 million IRAs, around $17 trillion are in the IRA world. It's around $35 trillion in the whole retirement world. So thankfully, most Americans are pretty wise, and their largest nest egg is in a retirement account. And this is why it's important. So there's multiple types of IRAs, but the pre-tax IRA, the two benefits of a pre-tax IRA is you get a tax deduction for putting money in the IRA, and a tax deduction is good because it reduces your tax liability. And number two, you take advantage of the power of tax deferral, meaning your money grows without tax. That's known as compounding returns. Albert Einstein coined that the eighth wonder of the world, means based off the power of 72, assuming a 9% rate of return, your money doubles every 8 years. So in basic common sense, obviously you're going to have more money at the end of the day if it's not subject to income tax. So that is the two principles behind the retirement world. And that's why when you look at Washington and you look at politics, it's the only area where there's bipartisan support. Meaning if you're in the Ways and Means Committee, the Senate Finance Committee, both Democrats and Republicans support the retirement system. Why? Because it works. It's not zero sum. We all could be seven-figure tax-free millionaires, and it works for everyone. So it's an amazing source of retirement wealth, and it's the best place to save.
So when I looked on your website, which I'm very excited, I've got four out of it. I think there's six of them up there on your website.
Yeah.
So what are
books.
some 9 books, man?
Yeah. Yeah.
I've got 10, so we're neck and neck, my friend.
Okay. I'm
So
gonna get you.
congratulations.
Catching up.
So what are some investments that people can make with the self-directed IRA that they can't make with the traditional one?
So IRAs, as I mentioned, were created in 1974. Congress did not distinguish between IRAs that bought publicly traded assets like stocks and alternative assets like real estate. Okay, there was no distinction. So unfortunately, what happened in the 70s is that the large financial institutions like Merrill Lynch and Vanguard said, you know what? We'd rather sell people stocks because we can make more money by charging commissions to buy the stocks and also to give investment advice. So they basically forced everyone into publicly traded assets. But lo and behold, when the tax code was written and section 4975 and 408 were the two sections that basically says what you can't do, there was no distinction and there was no actual discussion of alternative assets. The word self-directed IRA doesn't exist in the tax code. All it means is an IRA that invests in non-publicly assets like real estates or private businesses or gold or Bitcoin or venture capital, private equity. So it's everything that's not publicly traded. And essentially, you can do almost anything you want with a self-directed IRA.
So give me an example of anything I want.
Okay, so how about this? This is easier. There's three things you can't do. Otherwise, you can do it. You can't do life insurance. You couldn't in a 401k, not in an IRA. You cannot do collectibles like art, baseball cards. And thirdly, the broadest category of prohibited transactions is found under Internal Revenue Code section 4975. And it basically says this in sum. You can't do anything with your IRA that directly or indirectly personally benefits you, your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities 50% or more controlled by such persons. Meaning you can't buy a house and live in it. Can't take your IRA, buy yourself a Porsche. Can't take your IRA, buy yourself a Rolex watch. Can't take your IRA, take your family to Hawaii. Otherwise, you can do it, right? You can buy real estate, rent it out to a third party, rent it to your brother, sister, aunt, uncle, cousin, colleague. You could buy gold, Bitcoin, invest in real estate, private equity, hedge funds, venture capital, credit funds, invest in your friend's business, sister's business. You can do almost anything you want.
Right. So what's the biggest myth or misconception about a
I
self-directed
think the
IRA?
biggest misconception is that it's hard and scary. Why? Because the word alternative, right? The financial institutions did that purposely. They wanted you to think that anything that's not publicly traded is alternative, right? It's scary. You shouldn't touch that stuff. But no, all it means is you can diversify. So if Congress did not want us to invest in real estate or alternative assets or private businesses with the retirement account, they would have shut it down, right? Just like in a Section 529 plan, a college savings plan, you can't do alts. Okay, you can only do publicly traded. They had a public policy reason for that. IRAs, 401ks are wide open. You can almost do anything you want. Why? Because Congress understands the value of diversification and the value to invest in different types of assets.
So can you give me an example of someone that used a self-directed IRA in a creative or unexpected way that made you go, now that was smart?
Sure. There's the most famous one. There's a gentleman named Peter Thiel. He's very famous. He's a very smart guy. He has a Roth IRA that's worth over $5 billion. So let me explain what Peter Thiel did and show you that you and I can do the same thing. So I talked about a pre-tax IRA. A Roth IRA was created in 1997 by Senator Roth. And remember I said the pre-tax IRA, you get a tax deduction for what you put in, which in 25 is 7,000 or 8,000 if you're over 50. And then the money grows in the IRA tax-free. And then once you hit 59 and a half, you can pull it out and pay income tax on what you pull out. A Roth IRA is kind of the flip side. It's an after-tax account, so you don't get a tax deduction for what you put in. But here's the catch. So long as you're 59 and a half and the Roth's been open at least 5 years, everything you pull out is tax-free, not a cent of tax. So what did Peter Thiel did? He put $1,700 in a company called PayPal, which we've all heard of. Him and Elon Musk and a few other founders. So he owned less than 50% of PayPal. He paid fair value for the shares. It was a startup. He literally paid par value, like less than a penny a share. He turned $1,700 into about $26 million tax-free in a few years. And here's the next thing he did. He was the first investor into Facebook. But instead of using personal money, he said, you know what? I'm going to use a Roth IRA. And he put $500,000 of Roth IRA money into Facebook. And several years later, he turned that into over $450 million tax-free. So, maybe we're not all as smart as Peter Thiel. He went to Stanford Law. He's a brilliant guy. But we can do it on a smaller scale. I've done it. I invested in someone's business about 8 years ago, and I turned a very small amount of money into an extremely large amount of money. Bitcoin. I've been buying Bitcoin since 2014 in a Roth IRA. I've 20x'd my money, all
Right.
tax-free. So we can all do the same principles, use the same principles of Peter Thiel, and employ it in our life.
Okay, and which of the 9 books talks about that one?
Oh, I think all of them do. But the last one, it's called Mastering the Self-Directed IRA. It came out about a year or so ago. It's short and sweet. It's about 100 pages. And what I wanted to do is I broke it down into very short chapters. So there's a bunch of chapters about the basic boring stuff, the rules. And then you
Right.
can kind of pick and choose the more advanced topics like how to put founder stock in a Roth IRA. So it's covered in this book. And it's very easy to kind of peruse and investigate.
So I know you see this a lot. There's a lot of people in our age group, right, that haven't saved for retirement. I don't know what they were thinking. Like there's a magic wand or silver bullet or somebody's going to come save them. I'm not
Not
sure.
their fault.
So let's
Not
say
their fault.
it's not their fault.
No, no one taught us, right?
Right.
I mean, listen, I give people the example, like I'm a pretty smart guy. I have a law degree. Even have a master's in taxation. I worked at some of the largest law firms in the world for 8 years, and I had no idea that you can do this stuff, right?
Right.
So it's no one teaches this stuff. I didn't take one retirement class in college, law school, and my master's program.
Right. Yeah. We definitely don't. But we've always heard, save for retirement, and so I do believe if it is meant to be, it's up to me, right? So I love that you make it simple, right? In layman's terms, but also very educated in that. So if someone has 50 grand in a traditional IRA, what's a real life step-by-step move that they could take into turning it into something more dynamic?
Right. So great question. So the first thing you can do is you should decide what you want to do. And the beauty of the retirement world is you have freedom. So if you just want to put all your money in Tesla stock or into QQQ, SP 500, you can do that. But if you want to diversify, you can say, you know what, I'm going to take 20%, 30%, 40%, and I'm going to move that into a self-directed IRA. So remember, the only difference between a self-directed IRA is you're able to do non-publicly traded stuff like gold or Bitcoin or real estate. So you can take, let's say you take 20 grand, you open an IRA with IRA Financial, tax-free movement of the money from, let's say, Vanguard or Schwab to IRA Financial. And then there you have total control and you could decide to buy gold, cryptos. You can lend money to a neighbor at 15%. You can invest in a startup, the next ChatGPT, your own business. So there's a lot of great things you can do, but really it's up to you. You have the freedom. You just have to decide what you want to do.
So what kind of person's not a good fit for a self-directed IRA?
So I think well, first of all, I think you generally need probably 5 to 10 grand to start, right? Other than maybe doing some meme coins, it's hard to buy, to really start with less than 5 or 10 grand. So yes, you can do like some Ethereum or Bitcoin for 3, 4 grand. But if you want to get into real estate or invest in a private business, obviously invest in an investment fund or do a loan, you'd probably need at least 8 or 10 grand. So if you aren't there yet, what I would be focused on is building up your nest egg. And there's 3 things you just need to focus in, and this is guaranteed to work. Okay, you need to start, right? As you mentioned, go open. If all you get from this podcast is I need to open an IRA or Roth IRA, and I think it should be a Roth IRA, then do that. Okay, whether it's a Schwab or IRA Financial, I don't care. Open it. Second is be consistent, right? Get good habits, make annual contributions. And then the third is the easiest part. Just you got to be patient and trust the process. And this system is based off mathematics. It's based off compounded returns. So let me, if I may, let me just give you a simple example. Okay, and I'll show you the time value of compounded returns and why it's so important to start. So here's some numbers. Assume you're 25 years old, okay, and you put in $3,000 a year. That's it. And you go from 25 to 70, and you're going to save around, $230 a month. That's it. $3,000 a year from age 25 to 70. And assume I have an 8.5% rate of return. And that's pretty conservative because if you look at the S&P 500, over the last 100 years, it's averaged over 10% rate of return. If you did that, when you hit 70, you'd have $1.35 million. Okay, pretty good stuff. But let's say instead of 25, you started at 32. Okay, same numbers, 3,000 from 32 to 70, 8.5% rate of return. You only have 748. Okay, so again, start as early as you can, be consistent, and trust the process. Now, that doesn't mean you should quit because you're 30 or 40 and you're like, oh man, I don't have anything saved, I'm dead. No, it just means that if you want to catch up, you're going to have to put in a little bit more money. So let's say you start at 32, but instead of 3 grand, you put in 4,500 because you're a little bit older, you have some more capacity. So you would have 1.1 million, right? So you can make up for lost time. You need to know and get in the right retirement plan, but it's possible.
You're listening to another episode of Power Your Profits podcast. We'll be right back after a quick word from our sponsors. Are you tired of pouring resources into strategies that don't work? Say hello to Dr. Susie Carder, your future fractional COO. With Dr. Susie in your corner, your business can skyrocket to 7 figures and beyond. With a track record of creating thriving businesses, trust that you are in good hands. Head over to coo.poweryourprofits.com and let us put some magic into your business growth. Are you tired of struggling to take your business to the next level? Power Your Profits is the game-changing book you've been waiting for. Dr. Susie Carder, creator of the Predictable Success Method, reveals her proven strategies for explosive growth. From daily operations to marketing systems, this comprehensive guide empowers you to achieve predictable revenue and profit growth. Don't miss out on this invaluable wisdom. Transform your business today. Find your copy at books.poweryourprofits.com.
So talk about your firm, right? So the IRA Financial, right? So, when I work with my financial advisor, sometimes you just feel like what's happening, right? There's no strategy. It's I'm making those decisions, which isn't necessarily the best person to be making the decisions. Like I want partnership. I want someone to say, we should do this, we should do that. So talk about how you work with clients and what's different than the average financial advisor.
Right. So IRA Financial, we have around 25,000 plus accounts, 4.5 billion in assets, and we're all about freedom. So I personally think there's like nothing more American than taking control of your future. So sure, you should talk to a financial advisor. Absolutely. But in my case, my 3 best investments I made, my financial advisor told me not to do. And they're private investment, real estate, and Bitcoin. All 3 times my financial advisor, who I love, is one of my good friends. He's like, Adam, you shouldn't do it. It's risky. Just buy publicly traded stuff. Like you'll be better off. And I literally like I'm rich because of those 3 investments. So
Right.
yes, you should talk to people, but you have to make your own decisions. Only you can control your future. If you think your financial advisor who has 400 clients really understands and cares so deeply about you, either you're lucky or you're mistaken. So ultimately, yes, listen to people, talk to people, and you should use someone if you're doing equities and get their thoughts. But I truly believe in diversification, and it's worked for me. It's worked extremely well for my clients. So ultimately, yes, you're going to have to take control of your future. You're going to have to make decisions on your own because if you don't, you're going to get left behind.
Right. So then do you support them in putting a plan together or they're just still in control by themselves?
So we allow our clients to do whatever they want. As long as they're not buying life insurance, collectibles, or self-dealing, like buying a house and living it, they're on their
Right.
own. So if I have a financial advisor, they should have one. We're all about unlocking people's money, empowering people, creating their own luck, and making their own wealth. That's what IRA Financial is about. We don't want to charge, we have flat fees. We don't charge you asset valuation nonsense. You're in control. You make your decisions. If you want to
Yep.
use a financial advisor, you should. If you don't want to, we don't care. We want to empower you to invest in what you want.
Right. So stocks or real estate, which one plays better with self-directed IRA?
Well, I think definitely real estate in the self-directed world doesn't mean you shouldn't own stocks. Like I personally believe you should own a little of everything. Like I have exposure to stocks. I have exposure to ETFs. I have exposure to gold. I have exposure to cryptos. I have exposure to real estate and I have exposure to private businesses. I think that's what makes a good portfolio. If you look at Larry Fink, he is the CEO of BlackRock. It's the largest asset manager in the world. He just came out and said 20% of people's wealth should be tied into private investments. So listen, if you look at the great American companies, I'm not sure your listeners know this, but 80% of all companies with 100 million revenue plus are private. So that means if all you're doing is buying publicly traded companies, you're probably owning 10 companies at the end of the day, right? If you're buying S&P 500, it's literally made up of 10 companies that has all the value. So you're not diversified. You're susceptible to a major market swing if there's a downturn. We saw what happened on, Liberation Day. So I think if you're not diversified and you're putting all your money in equities, I think it's a tragic mistake. Again, I'm not giving people investment advice. I'm just a tax lawyer, but I've seen it with my clients. I've seen it with myself. I think it's a wrong decision and a wrong move if all you're doing is just buying stocks.
Right. So let's talk taxes a little bit because you have some expertise there, a lot of expertise, because nobody wants
Yeah.
Uncle Sam taking more than a share. How can a self-directed IRA help us keep more of our money where it belongs?
Yeah, the beauty of the self-directed IRA and why I love it so much, it marries my 2 favorite principles, freedom. So I love being American, freedom and tax deferral, no tax. So why I love self-directed IRAs, you get to invest in almost anything you want and all the income and gains from the IRA investment is tax-free. That means if I bought real estate, I bought a house for 100K, sell it for 1,900,000 grand, tax-free. I don't have to worry about ordinary income. I have to worry about capital gains. I don't have to worry about holding periods or basis, tax-free. I buy Bitcoin for 3,000, sell it at 105,000, tax-free. I buy my friend's business, I invest 50K, turns into 50 million, tax-free. I don't have to pay 1 cent in tax to Uncle Sam. So that's why. That's why smart people
Take it
save in
out,
retirement. Yeah,
right?
when you
So when
take
I
it
take it
out,
out, then, yeah. Okay.
only with a but Susie, only with an IRA pre-tax. If you do it in a Roth IRA, like Peter Thiel, he's 57. When he hits 59 and a half, he's going to pay zero tax. Okay, so he
Right.
can literally take $5 billion and literally put it in his pocket in 2 years, tax-free. Not 1 cent to Uncle Sam.
Boom. Let's just say boom,
Boom.
drop the mic. Just boom, drop the
Boom.
mic.
Drop the mic. And then you have a lot of, yeah, you have a lot of entrepreneur listeners. There's
Yeah.
something called a ROB structure, rollover business startup. It is the only legal way that you can use your pre-tax retirement money to invest in your own business without triggering a prohibited transaction. So that means, let's say I think I'm going to create the next ChatGPT. Okay, and I'm going to own more than 50%. So I'm going to run into some prohibited transaction issues with the IRA. So I can do something called a ROBS, a rollover business startup solution, where I can use a 401k to invest in a corp. And this way I can own more than 50%, all in my retirement account, use the money tax-free, penalty-free. And when I sell the business and I sell the stock, all the gains are tax-free.
Boom. Okay, so let's talk
Boom.
about, so you have written 9 books, so clearly you're not messing around. What's the biggest myth or misconception people have, they still have and believe about retirement accounts that drives you bananas?
Okay, so we kind of touched on it, is really how scary and complex a self-directed IRA is. And it's not. It's literally an IRA you're opening up with IRA Financial. Okay, it's the same onboarding process you would do at Schwab, Vanguard, Fidelity, Merrill, Bank of America. You just do with us. Then the fun begins because you actually get to decide what you want to do. So it's easy, it's simple, it's not scary. My best investments have been alternative. If you look at the Forbes top 100 list of the richest people in the America, okay, you'll see 30 to 40% of them are all in the investment world, meaning they're not stock pickers, they're private equity, they're real estate venture, they're venture capital, they're private business people, right? Why? Because they're investing in alternative assets, they're investing in private stock, they're investing in private equity, venture capital. They're not just picking stocks. You can't get super wealthy picking stocks. You can maintain wealth, and it's a great source for dividend building and also for just having exposure to certain companies. But if you want true exposure to great American companies, the only way to do it is through a self-directed IRA.
And what's the worst thing someone can do with a self-directed IRA?
I think the worst thing you can do in any investment is do something you don't understand. So whether it's buying, Tesla stock or Google stock or Apple or an S&P 500, it's important that you work with a financial advisor or you educate yourself on what that means in terms of volatility, what you're actually buying. Same goes for real estate or a private business stock. You want to understand, what's my liquidity? Can I get my money out? What's my risk? Who am I investing with? So I think there are some variables you need to know and probably a few more variables than just putting 20K in the S&P 500 where you're going to own 500 large companies. But the upside in owning alts, and you can see it from the Forbes top 100 list of the richest people in the world, comes down to if you have no exposure to alts, you're not going to get significant real wealth in your retirement account. You just won't have it.
Right. So what's your vision for the future of retirement investing?
So what we're building at IRA Financial, and we're hopefully getting there pretty soon, is I want to build a company where Americans can invest in anything legally available. So we have a partnership with Interactive Brokers we're working on. We're going to be the first company in America where clients can also buy stocks like Tesla, but also cryptos, real estate, and any alternative asset they want on our platform for one low flat fee.
I love that. And what's your favorite part about educating people on this strategy?
My favorite part is just when I kind of do those examples, especially young people, when I'm like, you're in your 20s. Do you know how powerful I would not? I'm in my 40s. I'm happy where I am. But if I can go back to my 20s, the one thing I would do other than partying more is start saving in a Roth IRA. Okay. I would max out every year I could, because based off compounded returns, I probably guarantee myself an extra, close to $1 million by just maxing out at an earlier age. So that's kind of the most fun, is showing people the power of compounded returns, and then letting people know that, yes, you can do real estate, you can invest in your friend's business, you can even invest in your own business with an IRA or Roth IRA, and it's so easy to do.
And so what's one question you wish I would have asked you, Adam?
Um, I mean, you've really hit on a lot of questions. I think what would be fun to get into is the fact that if you are an entrepreneur, what type of retirement plan you should look at.
Yeah. So I think if you didn't get rethinking your retirement strategy off of this call, then I don't know who will have you thinking more, because Adam just handed the keys to turning a retirement account into a wealth building machine. No suits, no gatekeepers, just smart moves and serious control. If you love this episode, share it with a colleague, share it with a friend, tag someone that needs this information, because somebody needs to hear Adam's conversation, and buy one of those 9 books, right? The 10th one coming out, because wealth is better when it's shared. And if you're ready to see where your business is leaking money or missing a major opportunity, head over to susiecarder.com/BHA, taking the $1 Million Health Assessment. It's quick, it's eye-opening, and it's your first step to really building your wealth and your power. So until next time, keep it bold, brilliant, and never forget, wealth is your birthright. And reach out to Adam so that he can support you in any way in building your wealth and getting this mastered. Adam, thank you so much for supporting us today, and you're genius. Cut that little head off and there's jewels. We appreciate you and adore you, and thank you for being here.
Thank you. Yeah, wealth is not a zero-sum game. We all could have millions of dollars.
Yes, my friend. Come on now.
Thank you for joining us for this episode of Power Your Profits podcast. Let these building blocks from today's most successful industry leaders equip you with the necessary resources and tools to finally establish the highly profitable business of your dreams. Want to hear more? Listen to more episodes at www.poweryourprofitspodcast.com. And don't forget to subscribe to the show. Now is your time to rise to the top of your game. So be sure to catch our next episode. Until next time.